In late 2017, Bitcoin, the world's largest cryptocurrency, experienced a historic surge in value, with prices skyrocketing from under $1,000 at the beginning of the year to nearly $20,000 by mid-December. The hype around Bitcoin reached fever pitch, with investors and speculators pouring money into the cryptocurrency market. However, the euphoria was short-lived, and by early 2018, Bitcoin and the broader cryptocurrency market began to experience a dramatic crash. The Bitcoin crash of 2018 was not an isolated event, but rather part of a broader sell-off that impacted all cryptocurrencies. In January 2018, Bitcoin's price fell by more than 50% in just a few weeks, erasing billions of dollars in market value. Other cryptocurrencies, including Ethereum, Ripple, and Litecoin, also experienced steep declines, with some losing more than 80% of their value. There were several factors that contributed to the crash. One of the main catalysts was the increased regulatory scrutiny of the cryptocurrency market. Many governments and financial institutions were concerned about the potential for fraud, money laundering, and other illicit activities, and began to introduce stricter regulations. This led to fears that the market would become more difficult to access, and that investors would be forced to sell their holdings. Another factor that contributed to the crash was the bubble-like conditions that had developed in the cryptocurrency market. The rapid rise in prices was driven largely by speculation and hype, rather than any real underlying value. Many investors who had bought into the market near the peak were looking to cash out and take profits, putting downward pressure on prices. The crash in the cryptocurrency market had wide-ranging effects, not just for investors but for the broader economy as well. Many companies that had raised money through initial coin offerings, ICOs, a type of fundraising that relies on cryptocurrencies, saw their valuations plummet. The crash also led to a slowdown in the development of new blockchain-based technologies, which had been hailed as a transformative innovation with the potential to revolutionize industries. Despite the severity of the 2018 Bitcoin crash, the cryptocurrency market has continued to evolve and grow in the years since. While prices have not returned to their peak levels, there has been renewed interest in the potential of blockchain technology and the use of cryptocurrencies for a range of applications, including cross-border payments, remittances, and decentralized finance. In conclusion, the Bitcoin crash of 2018 was a significant event in the history of the cryptocurrency market. It highlighted the risks associated with investing in a largely unregulated and speculative market, and demonstrated the need for greater oversight and transparency. While the crash had a negative impact on many investors and companies, it also served as a valuable lesson for the broader economy about the potential and limitations of new and emerging technologies.